Today, I want us to focus on the New Zealand dollar, US dollar, and it's because I'm seeing some kind of mixture in this place. The fundamentals are saying the New Zealand dollar bullish, the US dollar not so bullish. So hence, it means you should be buying the New Zealand dollar. But when you check on the chart, you see a totally different ball game going here. You're seeing clear higher lows and lower lows. And this is the symbol of what a downtrend is on the daily time frame. So let's analyze this chart and see if there is an opportunity here for us. We're going to start all the way from the weekly. And from the weekly chart, well, this chart is clearly a downtrending chart without you having to look much. You can clearly see higher lows and lower lows, right? Higher lows, lower low, higher lows, lower low. And you're seeing constant break of lower low structure, right? Constant break of lower low structure. This is clear here, but this is quite evident right here. But however, price seems to be dancing around this 0.55 area, and it's just not so clean, right? Between the 0.6 and 0.55, it's been quite messy over there recently. But however, the overall weekly structure is bearish, right? Overall structure. As much as this is saying bullish performance in the weekly, you can look into the recent weeks and you can see we're having more bearish candles than bullish candles. You can see 2 consecutive bearish, 1 bullish, another bearish, 1 bullish, 2 consecutive bearish again. And then this week we're having somewhat of a doji situation, but the week is not over. I mean, we still have about Thursday, tomorrow is Friday, so 2 trading days left. We just want to see what this market could possibly do between today and tomorrow. Before we head into the daily, I can actually read the daily time frame from this place, seeing that we're having clear breaks below lows here. This is a symbol of bearish moves. We're not having break above highs. I don't have any weekly candle breaking above highs, unlike before where we had clear break above highs here. We had clear break above highs. You see constant freaking above it and then a clear break. But ever since the 30th of June, that 30th week of June, then we've had constant fall. Is there a weekly area around here? Of course, yeah, there is a very, very huge weekly demand zone, right? This is a very, very huge weekly demand zone. And we can't say price is respecting it yet because it went in, came out, but never closed above, right? It never closed above any of the previous weeks. So it isn't complete respect for me. It is a respect, no doubt, but it is not complete, you know? Price went in, came out of the area quickly. That's a respect, you know, that's a good level of respect. I'll call that a 80% show of respect. But when price dips into something and then comes out so strong that it breaks the previous high, or in the case of a drop, it breaks the previous low, closes away from that, it means this is a clear sign of change, right? For example, take a good look at this right here. What you see is a clear close, not just any kind of close below this low, but a clear close way below this low. Same thing as you seen when price finally went above this high after going away from these areas. You can see things like this are what you need to look out for, not just visually, but it's a tussle of power in your head, right? Now let's go on to the daily, and we're looking right on the daily. Now we have more of supply zones being respected, which is as good as you saying the market is bearish. You can see now price didn't even come into the supply zone, but there was so much others available for it to push away, and you can see another one right here, and then the price came around it and went off immediately. What I want to say right now is this is clearly a high where price needs to really push away from it for us to know it is serious about its new possible uptrend. And that is talking about the fundamental, right? The fundamental aspect of the whole situation is this: the retail sales for the New Zealand dollar had better information recent. Now this is the most recent economic data on the left, and then on the right we have the previous economic data for those specific economic situation, right? Now, talking about retail sales, they had better than expected numbers. Now, the numbers are not here. We're just looking at the sentiment that came out based on the numbers. The numbers, did they give us a bullish sentiment, a bearish sentiment, and to what degree is the bullish or bearish sentiment, right? In this case, anything above 50 is bullish, anything below 50 is bearish, 50 is neutral. Meaning you get all the way to 100, it means it is absolutely outstanding. You're getting something in the 60s, 70s, 80s-ish. It is just, it's quite good. It is good compared to what we expected, right? And it's always compared to what we expected. Don't forget, the forecast is made by very intelligent analysts looking at the current data, previous data, and everything, and then saying, okay, we expect growth or we expect, decline. And if we are beating such expectation, it means obviously we're doing real good, right? And then if we are falling short of those expectations, boy oh boy, we're in trouble. Especially when those expectations are already bearish, we are in trouble. So in this case, we're looking at not so far off the expectation, and which is cool for the retail sales, but they're having good retail sales, meaning there is the GDP is going to be quite good over time, right? Because they are selling enough products, people are buying, there's buying in the economy. The production side, which is the manufacturing PMI and the service PMI, the people who produce things and sell things, the services, goods, we're seeing real good data from the New Zealand dollar. And this is looking at the past sets of data. They had a not so good retail sales data before the last one, and then the last one got better. So we're looking at the first sets of data that ends up becoming the trend for the economy. They're having good information in terms of sales and production. That is where the economy usually starts from. Are we producing and are we selling? Are people able to buy things? The next thing is employment. Now, because we are producing and we're selling, the people who buy the stuffs, right? For them to be able to buy stuffs, they need to be able to make money. And for them to make money, they need to be employed, either self-employed or company employed or whatever. But they need to be able to make money to be able to buy things. Are we having employment information? And their employment information is flatline. When I say flatline, it's more like it's good. Being flatline in terms of jobs is not bad. It is good. It's because we expected growth and we saw that expected growth, and hence it is cool that the growth is there. Now, the GDP, like I said, the buying and selling and production all ends up in the gross domestic product, especially the production. And you can see their GDP rose. Though their GDP was already good in the previous news, the current one is even better. Like they had even better GDP data announcement. Now take note, these are all data announcements. In the economy, there might be some other nuances if you're living in New Zealand, right? But overall, the data shared by their government is saying they have good economy. Looking at inflation now, this is where it starts to get a bit tricky, the fundamental aspect. Inflation is the part where I make money, but can my money still afford what it's used to buy? For example, I have $10, and let's say $10 could buy me this mic. Let's say as of last month, but I work, I get paid $10, the same $10, but now I cannot buy this mic because this mic is now $11. So I did the same amount of work I did last month to buy this mic last month, but I'm doing the same amount of work I did and getting the same pay, but I can no longer afford this mic, meaning I'm going to kill retail sales, as in the sense that because I cannot afford this, the producer will not find me buying it as often as possible anymore. I will be buying it maybe once every 2 months at this point in time. That is what inflation. So inflation data coming out terrible means people are not able to, or rather the cost of things have gone up and the ability to purchase those things are not readily for the same amount of people you used to have it, right? That's just it. Now, producer price index. Wow, this is something that I need to explain differently. It is out of, I don't even want to explain it here, but it is not good from this information, right? It is not good. The central bank rates mean the central bank, the bank that determines the interest rates in the entire economy, right? For the entire country. For every country has a central bank, and the central bank, when they drop a rate, that rate affects everything, your loan and your interest. But actually it's your interests that it really affects, and this is how it works. So let me explain. If I want to borrow money, let's say I own a business or you own a business and you want to borrow money to buy, raw materials, right? You want to buy raw materials to create whatever item you sell. If the cost of that item, just like it affects me as an individual, buying this microphone for $10 last month and now it's $11, it's the same way it affects the companies that produce things. So they have raw goods, right? For them to buy that raw product, that raw goods, and then transform it into a finished product has become quite more expensive. If central bank raises the rates, what happens is this: because the company is not able to have all the money to go buy things, they usually go to the bank for loans. If central bank increases the rates, the interest rate, if I want to collect money from the bank as a business owner, I would know that I will have to now pay back more in interest to the bank. Hence, it will make me not want to collect so much money. I will have to now collect less amount of money from the bank because I'm afraid of paying so much later on. So I'll collect a little bit of amount of money and then I'll go, use that small money to do the business. Rather than if the interest rate was reduced, right? If the interest rate is reduced, I would want to borrow so much money. And now this is how it affects. This really affects jobs, especially. Like, it literally has a direct correlation, not so direct, but it has a direct correlation with job, in the sense that if you drop interest rates, businesses will want to borrow more money. If they borrow more money, they will be able to create more jobs. By the time they create more jobs, more people will have more money to be paid at the end of the month. When people get paid at the end of the month, they can afford things. Now, linearly, that's like a real good thing. You should keep interest rate low, right? However, because there's a lot of people now who have jobs and they have money to spend, sellers will have to increase price, because who doesn't want to make profit off the fact that everybody's having money to throw away, right? Everybody wants to splurge. So sellers are going to have price rise. Even the companies that employ people will want to increase the price they sell things, because obviously they got way more labor cost now to spoon feed, right? So they will want to increase cost of things, and by the time cost of things go up, it will erode the employment money, like the money people who get employed used to get. Because in this case, for those who got employed, let's say this thing was $10 when they got employed. Now that the companies selling these things have seen that everybody has money, there's so much people, and we have new staffs, we want to pay them. All right, let's increase the price of our mic. I got a job, somebody else got a job in the company that produces this mic. The company wants to be able to pay that person, so the company increases the cost of the mic, and hey, I can't buy the mic anymore. So it's a circle. It's a very deadly circle, and central bank, they are very, very careful about increasing price, reducing price, and letting it fly. The next thing is the unemployment rate. Now, this is where the central bank also could do miracles, right? Now, the central bank, when they increase their interest rates, the first one I just explained was the reduce. The next one is when they increase the interest rate. This is the whole shebang that happens. When they increase the interest rates, companies know, oh, I can't borrow money anymore. I can't borrow as much as I used to borrow anymore. All right, so what do I do to be able to borrow a little bit of money and then not have to suffer when I have to pay back? All right, so I'm going to have to let some people go. I'm going to have to reduce some costs. And hence, hey, 2,000 of you laid off. And you can see where unemployment rate starts to shoot up. Now, unemployment rate here, you seeing it above 50 means good data. What I mean by this is, what I'm looking at is, did the data come out good? Not as if the data has large numbers or small numbers. Did it come out good? So in this case, they are saying that unemployment rate kind of dropped. So it's a good information. Now, looking at this whole situation, I want you to put that whole situation into the US economic data you see here, and then apply it for the rest things on this chart. One thing you will notice is that the New Zealand dollar has like the best in terms of economic data compared to every other thing on this chart. However, it doesn't just mean you dive in there and buy the New Zealand dollar, right? Because there's a lot more things on the table that the fundamental economic data does not tell us. For example, the US dollar remains the world exchange. For example, the US dollar remains the world exchange currency. It's the currency the whole world uses for transaction. Literally, we are all powering the US dollar, like it or not. Every single person who does transaction with the dollar powers the dollar, because you have to actually sell your currency to buy that currency to pay for what you want to pay internationally, and then that payment makes the US dollar gain profit. The US economy gain profit of that whole span. It's a whole new ballgame. Hence, the US dollar, even though it looks low, still has like 200 plus behind his ass. So for example, it's saying 448. Add 200 to that thing, it is 648 compared to 520. It is still by far toppling everything on the table. So whenever you look at the US dollar, think of what is it at a buffer. Whenever you think of other currencies, what it is what it is. And then also the Swiss franc. Whenever you think of the Swiss franc, because we do not get like enough economic data from there, whenever you think of the Swiss franc, add a buffer, because the Swiss franc is by far the most stable. I've said this multiple times on this channel. It is by far the most stable currency we have seen yet in trading and in the world. It is so stable that when everything seems like they are dying, the Swiss franc is where everybody wants to go dump their cash in. It's just like should I call it Bitcoin? But not like Bitcoin, but it is a Bitcoin in the real world, like a real life Bitcoin. Now take all this knowledge I just dumped on you and put it all on this chart, and what you see is, as much as the economy is screaming better than prior, this is what I'm observing, right? This is what I am personally observing. I'm only going to wait for price to make its way into very critical zones. You can see right here is the first part where I had a clear push up of price, in as much as this is where we had the break, and this is where we should be expecting break and retest. But we've already had break and retest as of 12th of May. It has already retested and moved off of that. So I don't see that as a good zone to jump to buy off of. What I really want to see is a good, should I call it a good build up of bullish move. In that case, I could sit on the 4 hours or on the 1 hour, and I would want to see those consecutive market structure to the upside, which is a bullish move, an uptrend. By the time I start to see a clear uptrend, you can dive into the chart and I'll buy some New Zealand, sell some dollars, and hope to make some profit from it for like probably a week or two. And that is it for the New Zealand dollar. I hope you enjoyed this deep dive analysis into one currency pair, and we're doing all the way from the fundamentals to the technicals. It's not just one way or stuff. We also do the market structure analysis alongside. You can see we already did the market structure analysis, but for those who do trend lines and QMR, QMC, there's no QMR here for you to look out for. It's not here, right? You can't see any pattern here, though it looked like there was a pattern, right? This looked real pattern like. But however, I don't see this as a good pattern. I say it like it's a mix. So that's why I'm not advising you to go with any of this yet here. In my opinion, even with trend lines, let's do the trend line analysis. For those who trade trend lines, this first one was the weekly trend line, and then you put up your daily. So your daily is this, the daily driver is this. Your 4 hours, can I just close this right here and we'll refresh all of this. So on your 4 hours, you have multiple trend lines to see, right? You have this one, and then you have this one, this right here. So you can see everything we're drawing still falls within this high I pulled out here. If price seems to be making it out of this daily high, you can see it's a daily high I drew all the way from the beginning. If price could make it out of this daily or weekly high, it's a weekly high, then we have like a good reason to say, all right, there's a tendency. But if you're down for the 1 hour, right, you're looking for the tightest of entry, we have this 1 hour uptrend. Not really an uptrend yet, because it is not showing an uptrend. Uptrend means it has to take out this right here. So if you're looking for those extreme minute move, this is where you should be looking out for that small move above and then a little bit off pullback for you to start to buy, aiming for probably even if it's just a weekly upside. So that's it, my people. I'll tell you thank you for watching. Have a great rest of the day. Peace. See you guys in the next analysis video.